Hey guys, my name is Anna and I'm going to be here going forwards talking to you about UK stocks. For the time being, I'm going to be here every 2 weeks, and if you guys are interested and enjoying the videos, then I will appear more often. Today, we're going to be looking at 3 trending UK stocks that analysts say are a strong buy. So without further ado, let's just jump straight into it. So the first stock we're looking at is Royal Mail, ticker symbol RMG. Royal Mail is currently trading at $5.90, and you can see here that the analyst ratings are showing a strong buy from 5 ratings in the last 3 months. When looking at the average price target, we are looking at a potential upside of 12%, with a potential high forecast of £8. Now, seeing Royal Mail on the list initially surprised me because I didn't really think it was a stock that was worth investing in terms of huge growth potential. However, as you can see here, the sentiment is very positive and bullish with the consensus of a strong buy. And the smart score is 10, which means that the stock is likely to outperform the S&P 500. Now, if you aren't already aware, Royal Mail Group is a British multinational postal service and courier company, originally established in 1516 as a department of the English government. Now, that means it's been around for 500 years. If we look at the share price from the last 12 months, it has essentially gone from 175 to just under £6, which is a huge increase. So if, like me, you are wondering what the deal is with Royal Mail recently and why the share price is rising so much, I've looked through a lot of news articles to try and get to the bottom of it. So as you can see, the first thing that stands out is that Royal Mail will make a triumphant return to the FTSE 100 when Britain's blue chip index is reshuffled this month. So it was announced earlier this month that Royal Mail will be going back into the FTSE 100 index. So of course this means that the index funds will have to buy into the Royal Mail shares. The other thing that has hugely contributed to this great run with Royal Mail has been the increase in e-commerce. Obviously, with everyone at home and the shops closed, everyone's been using e-commerce as a way to get stuff. Revenues as a result rose 16.6%, with a 39% rise in parcel sales offsetting a 12.5% fall in letters. Royal Mail also announced plans to double its profits at its international arm, which has also contributed to people feeling really confident about its performance going forward. The next stock we're going to talk about is Mitchells & Butlers, ticker symbol MAB. They are currently trading at £3.03, and based on 6 Wall Street analysts, the average price target is £3.84, which would be a 26.7% upside. Now, if you look here, even the lowest price target at the moment is higher than the current price, which potentially means that all of them agree that the share price will go up. Mitchells & Butlers is actually one of the largest operators of restaurants, pubs and bars in the UK. And if we look at the brands, there are 2 of my favourite brands on here, All Bar One and Browns. So before everything happened, I used to spend a lot of my time there. So I'm very, very supportive of these companies. They were established in 1898, which means they've been around for a long time. And they are also a constituent of the FTSE 250. As you can see, they also have a smart score of 10, which means they are likely to outperform. As well as this, the blogger opinions seem to be bullish, and the insider activity has a trend of buying shares. One thing to note on here, of course, is that they are currently loss-making, but considering they are in the hospitality sector, which means they've essentially been shut for the majority of the last 12 months, this is unsurprising. So providing everything goes well and we do continue to keep restaurants and bars open, then I think that this could potentially have a great upside. As we can see here on this news article, pub owners Marston's and Mitchells & Butlers may be reporting big losses for 2020, but their sales have been strong since the hospitality industry was allowed to reopen last month. Their sales are currently back to 67% of what they were before everything happened. Of course, considering the sector that this is in, there is a risk around what's going to happen going forward. But on the other hand, in my opinion, bars and pubs in the UK are just completely treasured. So you have to offset that against them being shut. Make sure you are comfortable with the level of risk you're taking and ensure that you do your due diligence. So the third and final company we're going to look at is Glencore, ticker symbol GLEN. It is currently trading at $3.29 with an average potential upside of 11.4%. You can see that there's been 11 analyst ratings in the last 3 months, of which 10 have been to buy and 1 has been to hold. The highest price target is $4.80 and the lowest is $3.07. Glencore is a multinational commodity trading and mining company with headquarters in Switzerland and its oil and gas head office in London. It is also a component of the FTSE 100, which means it's one of the biggest companies in the UK. Over the past quarter, shares of Glencore have actually risen 11.2% compared to the S&P 500, which only moved 11%. But if we look at the year-on-year price rise, it was 158% for Glencore and only 51.8% for the S&P 500, which means that for the past 12 months, this stock has been outperforming the S&P 500. Unsurprisingly then, the smart score is 10 outperform, and the consensus is bullish and a strong buy. The one thing that I'm personally a huge fan of is that they've actually made a promise to help tackle climate change, which to me, seeing that in a company that deals with commodities and oil and gas, etc., is really, really great. We can see here that they've committed to a 40% reduction of total emissions by 2035 and a net zero total emissions target by 2050. I think that's not an easy target, so it's wonderful to see that they have actually committed to it. So that's it for today. Let me know what you think of these 3 stocks. Do you have any of them in your portfolio? Are you adding to your shares in it? Let me know and I'll see you next time. Bye.